What is going on YouTube? It's your boy Dollar Mike and I'm back at it again with another video. And last week I made a video going over a cool strategy that you can use on the stock market to make yourself some extra monthly income, and that is known as the covered call strategy. I talked about it, I went in depth with it to an extent, pretty much for beginners, just to show you guys the strategy, how everything works out and how you can take advantage of it for yourself if you wish to do something like that on the stock market to make some extra money. In this video, it's going to be more of an extension of that video, and I'm going to give you pretty much the beginner intricacies, everything you need to know essentially about covered calls that I couldn't explain in that video because it would have got too long. So in this video, stay tuned, stay locked in. I'm pretty much going to give you guys everything you need to know about covered calls so you can go ahead and be successful with covered calls, as I'm going to try to do so as well. And like I mentioned before in the previous video, we're also going to turn this into a series eventually as things come together, and hopefully we can all make money, at least extra money, on top of the money that we're already making from dividends and just possible growth in stocks in the stock market today. So let's not waste any more time. Let's get right into the video. Let's go. Now these covered call need to knows will be in no particular order, so I'm just going to go down on the list, and let's start with the first thing on the list. And the first thing is when it comes down to actually picking the stock to do the covered call on. So typically you want to pick a stock that's not doing too much in the market right now. You don't want a stock that's drastically increasing in value, drastically decreasing in value. You want a stock that's trading sideways. There might be a little bit of growth over a week or a month period, maybe $1 or $2 or a percentage or two depending on what stock it is, but you want something either completely trading sideways, slightly increasing, or slightly decreasing when it comes to the short term. In the long term, when it comes to covered calls, you ideally want all your stocks to go up, because that's how you make money in the stock market, by overall buying stocks and having them increase in value. But in the short term, it doesn't really matter, or it doesn't really work in that case. You really just want something that's going to stay steady enough for you to actually make money on the covered call, and then you go ahead and get out, collect your profit, and do the same process again the next week or the next month, depending on if you do weeklies or monthlies. You still want that stock to have a decent amount of volume and pretty much tradable activity, just no major drastic changes in the stock price at all. You don't want that at all when it comes to doing covered calls. So if you see a stock like that that's been doing that over the past couple of weeks or months, it's probably not one of the best stocks to pick when it comes to doing this strategy. Another major key is you want to make sure you're making money if you happen to get assigned. So you want to make sure you're doing covered calls with a strike price that's higher than your average cost. So I'm going to show you guys my Robinhood app real quick, just to show you guys exactly what I mean by average cost and making sure it's higher than that strike price. So I'm opening my Robinhood app right here. I'm going to scroll on down, just pick a random stock. Let's just do let's do this one right here. Let's say I had 100 shares of Realty Income, and I want to go ahead and do this covered call strategy on it. And this is actually one of the stocks where I want to do the strategy on in particular. But regardless, I don't have 100 shares of it. And if we scroll down on it, you can see what my average cost is. This is pretty much my cost basis. So overall, my average cost on Realty Income right now is $60.90. So pretty much if I was to sell all my shares right now, I would profit about 2.68%, which we can see right there is the total return, or $28. I want to make sure that my strike price when I'm doing the covered call strategy on this particular stock is over $60.90, because if I ever happen to get assigned, then I'm going to have to sell my shares of Realty Income. And I want to make sure I'm selling my shares for a profit and not for a loss. If it's under $60.90 as the strike price, then I will be selling for a loss, and therefore I would lose out on money when I go ahead and sell my shares. And if you want to see the strike prices, they are right here, and they're also in that previous video. I highly recommend you watch that video first before watching this one. Either way, click trade options, and go ahead and click on a date. We talked about all this in the previous video, and you can see all the strike prices. So like I said, my average cost is $60.90. So pretty much I can make a profit right here at $62.50, $65, $67.50, $70, $72. That's simple, that basic. Just make sure you're picking one of those strike prices, or a strike price that's higher than your average cost or your cost basis. That's it. Now I just mentioned this word known as assign. This is exactly your goal of what you don't want to happen. Your goal is for your shares not to get assigned. Your goal is for you to keep your shares and also collect a premium every single week or every single month on the stocks that you particularly want to do the covered call strategy on. So when you do this covered call strategy and you go ahead and select the strike price that works best for you, that makes sense, that has the right premium, all that kind of good stuff, if that strike price that you set gets hit, it by the expiration date, then that means that you will be selling all of your shares, your 100 shares of that underlying asset to the buyer. That means your shares will be assigned, and that's pretty much it. You still get to collect the premium, but of course you're selling your shares. So that's why it's important to also have that be above your average cost so you don't lose money overall on the entire transaction. And also make sure that if your shares do get assigned, you understand that your shares will be sold off to the buyer that you already set the strike price for. The main thing is that you need to be realistic when it comes to actually doing this strategy. Nobody is perfect. People make mistakes. Things happen. You don't know what's going to happen as far as the market goes or any particular stock. Some news might come out and the stock might skyrocket off some basic news that comes out, which would obviously put you in a bad position because you would have to go ahead and sell your shares. So it happens. It's just something to be aware of, and it's something to note. And that's pretty much it. You will get assigned one day, especially as a beginner. I'm expecting to get assigned one day as well. We're not perfect. It just doesn't work that way. We don't live in a perfect world. Things happen, but make sure you're taking care of yourself by doing these couple of steps. So if you do get assigned, you're still making profit versus losing out on some money. But another important thing to note is that you still want to pick a stock that has great long-term growth and that you actually believe in for the long term. This is still a bullish long-term strategy. It might be short-term bearish, as people may argue or say, but this is still a bullish strategy. You still want your stocks to go up. So it depends on the stock, but of course you don't want to pick a stock like Tesla, for instance. Tesla, I'm personally bullish on for the long term. I believe in it for the long term. I think the stock price will go up, and I think it's okay to possibly do covered calls on it every now and then, but it's just not the right stock to consistently do covered calls on, because Tesla is the type of stock that might jump 10-15% in a week or $20 in a day, and that's exactly what you do not want. You don't want a stock that's going to jump drastically, like I mentioned before, because that puts you at a risk of getting assigned and you possibly losing your 100 shares or more of Tesla stock or any other asset. So you want to look for a stock that's trading sideways or slightly trading up or slightly trading down. Something chill. In the case of Tesla stock, the risk simply isn't worth the reward. You'll probably just do better off just by holding the shares and casually letting the shares go up over time versus trying to do covered calls on it. I mentioned how dividend investors invest into these dividend stocks and also do covered calls on these dividend stocks in my previous video, and it makes perfect sense because some of these larger blue chip big name dividend stocks honestly are great investments to do for a covered call strategy, because you're still probably going to get long-term growth from them. You're going to collect dividend income from them, so you're also getting that growth and the dividend, and you can still go ahead and play covered calls on them because the share prices don't jump drastically in a short amount of time, which is exactly what we're looking for. So dividend stocks, like I said, still hold true to be one of the best value, I guess, in the sense of covered calls for your buck. But at the same time, there are also a couple of things to note about dividend stocks that you need to be wary of when it comes to doing these covered call strategy. You can do this with stocks that aren't dividend stocks, but I'm just talking about dividend stocks here. And some of the ones that I'm pretty much going to be trying the strategy on when I do get to 100 shares, or I'm already at 100 shares on some of these, is ticker symbol O, which is Realty Income, ticker symbol MPW, which is Medical Properties Trust, ticker symbol KMI, which is Kinder Morgan, and also ticker symbol WM, which is Waste Management. All four of these stocks that I just mentioned don't drastically jump in value on a weekly basis, so it gives me the opportunity to try the strategy out on. But either way, when it comes to the covered call strategy, you want to make sure you know, especially if you're trading with dividend stocks, you want to make sure you know when the ex-dividend date is, and you want to make sure that you are not doing any covered call strategies on the week of the ex-dividend date. There are a lot of different reasons. I'm not going to go over them all in this video. If you want to look them up, by all means, you definitely should, and you can. But overall, just know, don't trade or don't do the covered call option strategy on the same week as an ex-dividend date for a particular stock. Overall, it might put you in a position where you might get assigned early, and you don't want that. You don't want to lose your shares. You want to keep your shares, keep the premium, and then do the same thing all over, rinse and repeat next week. Another major thing you need to know and focus on is your business partner, your Uncle Sam. That is pretty much taxes. You're going to have to pay taxes regardless. You're going to have to pay taxes on, of course, all of your capital gains, and this counts as capital gains. So if you're making a couple of $100s every single month from this particular strategy, I would say set some money aside in a high interest savings account, so when tax season comes, you're good to go. You don't have anything to worry about. For me personally, I save about 30% of pretty much any like extra income that I receive. So I say like not dividends in particular, so I don't make too much off of dividends right now. But when it comes to like something like this strategy, if I'm making a couple extra $100 every single month, I'm just gonna set aside 30% of that into a high interest savings account. So that's just something to note. You don't want to run into a heavy tax bill when it comes to tax season, because yeah, you might not have the money. You might have spent it. Who knows? So, and you also don't want to sell your shares to buy it or to pay for your taxes. That's no fun either. So, having the money already set aside, ready to go when you need it is all you need to know. And that's just a life tip, to be completely honest. Have an emergency fund. Well, on top of that, if you have hundreds or thousands of shares of a particular asset, say Apple stock, and you're doing this on Apple stock, you're doing the strategy on Apple stock. If you have hundreds or thousands of shares on Apple stock and you bought Apple, I don't know, 2007, year 2000, I don't really care. You bought Apple a long time ago and you have a lot of gains with Apple stock. Just something to note. If your shares ever happen to get assigned, then you will have to pay an insane tax bill, because remember, when your shares get assigned, you're selling all of your shares. We don't want the shares to get assigned, but we don't know what could happen. Things happen in the market. Stock prices rise, stock prices fall. So you can't 100% guarantee that it's always going to play out in your favor, and you want to make sure that you're making the best, safest decision for yourself. So if you have a lot of gains in a particular stock, I honestly wouldn't bother trading with it when it comes to the covered call option strategy. Or what you could do is you could just trade a couple of hundred contracts, or a couple of hundred shares, so 1 or 2 contracts, maybe 3 contracts, depending on how much money you're willing to possibly sell to possibly pay taxes on. Just something to note, something to think about. So if you have $10,000-$20,000 in gains from a stock that you had for like 10 years now, just be a little wary of that when it comes to tax time, in this sense of if you get assigned. If you don't get assigned, nothing to worry about. If you do get assigned, make sure you take that money out. Put it to the side come tax season, because you're going to have to pay some money on that. And disclaimer, of course, I am not a tax professional. I am not a certified tax professional in any way, any means, any shape. So definitely talk to a certified tax professional if you have other tax questions. Do not leave them in the comment section, because honestly, I'll give you the best answer I might have, but I may be wrong. So like I said, check out with a certified tax professional. You can call most of them and they can answer the question for you for free, or you can go ahead and look it up online and find the information out for yourself. But from my understanding, that is exactly how it works. You have to pay taxes on your money when you make money in the stock market. So, and also know your tax bracket. Can't tell you what that is because I don't know how much money you're making, but yes. But like I said, there's a lot of information and intricacies in this video. We're almost done here, but if you enjoyed it so far, definitely drop a like. I greatly appreciate it, and it really does help out the channel. It's probably one of the best ways to help out the channel besides you just watching the video. And on top of that, thank you for watching this far anyway. Like I said, I appreciate y'all. The next tip that we have right here is known as the delta. When it comes to the Greeks in options, I've never made a video talking about all the different types of Greeks in the options, but I can do that in a separate video, which I probably will do coming up very soon, just going over all the different Greeks when it comes to options trading. Like I said, I'm a pretty beginner in options, so I don't do most of this stuff pretty often, but I am learning a lot more, and I'm also learning as I go, just like you probably are if you're watching this video. But regardless, the delta is just one Greek when it comes to trading options. What you're essentially looking for when it comes to the delta, or the number that the delta displays, is negative 0.30 or lower. Negative 0.30 pretty much means there is a 30% chance that the buyer will make out and pretty much win the options trade for you, and that means that they'll go ahead and get those shares assigned to them, and you pretty much lose the shares as assigned to you. You would sell it to them, you would sell it to the buyer. There's a 30% chance of that happening if you if you pick a particular strike price. I'm going to show you guys on the app so you don't get too confused or anything like that. I'm going to run it back again. And then obviously, since there's a 30% chance that they would win, it's a 70% chance that you would win. So obviously, you know 70 plus 30 equals 100%. You get the point. So let me not waste too much time on that. Let me actually jump on over back onto the Robinhood app and show you guys exactly where you can see the Greeks and see what I mean when I say delta, negative 0.30, all that kind of stuff. So we're back on the app. I'm gonna go back to the same exact stock. I'm gonna do realty income. I'm gonna do trade options. And we're going to go out to the same date I had before. It's still set as sell call. You guys know the deal. Make sure you watch the previous video if you don't know. But either way, let's see right here. We have a strike price of $65. Let's go ahead and click on that one. So we're going to click on that one, and then we're also going to go ahead and just click on the black space, and this is going to pull up the Greeks. Right here at the bottom, it shows the Greeks. So right here, it says the delta is negative 0.13. So that means right now it is a 13% chance likelihood that the buyer, the person that's possibly trying to get your shares, will win this options trade. And it is a 87% chance right now that the seller, or you, is going to win this trade. Pretty much, let's see, it says April 21st, $65 call for realty income. Will realty income run up to $65 by then? Maybe, probably not though, so you'll likely win this trade. That's all it's pretty much saying. There are other Greeks there obviously as well, like the Gamma, the Theta, the Vega, and the Rho. but we'll get into those in a separate video. It will just take too much time in today's video. Just understand that the delta is pretty much the odds of you winning the trade or the odds of the buyer winning the trade. So right here, 13% chance of the buyer will win, 87% chance you will win. I'm just subtracting 100 from 13, and that's literally it. We're almost done here, but like I said, I'm trying to give you guys as much information as possible so you can be successful on your options trading journey. The next thing is the profit. For maximum profit, you want to make sure you're initiating this strategy on a green day. That means the stock price is actually going up and it's in the green. You don't want to do it on a red day because you can still make money from it, but you'll make a lot more if you initiate on a green day and the stock possibly trades sideways from that green day onward throughout the rest of the week or month, versus you trade it on a red day and then the stock price goes down that first day but then goes up for the rest of the week of the month. You want to make sure you're trading it on the green day, and hopefully that stock price hangs around that point or overall goes down just a bit, or maybe goes up just a bit as well. Simply put, the premiums will be worth more money if you initiate it on a green day versus a red day. The last thing I want to mention is to not be greedy. You want to make sure you buy to close before expiration. You don't always have to do this, but if you're already in the profit, there's no reason in holding on to it till literally the last day to possibly hold on to it and letting the contract expire. You'll still get your money when the contract expires, of course, or you'll get to keep your money if the contract expires. But if you're trying to ease out, or ease out a couple of extra, $5, $10, $15, $20 just for the chance for you to make an extra $5, $10, $20 over another day, I don't personally think that's worth it. I think if you're already in the money, if you're already in profit, it's no reason to keep the contract open at all. Like I said before, you don't want to lose your shares. Anything could happen. News could come out and then the stock price just takes off, and guess what? You were in profit and now you lose all your shares because the stock price took off because some random news came out because of some random product that they're announcing. Things happen. Things just happen. So like I said, don't be greedy. If you're already in profit, take your profit and move on to the next position, or move on to the next time you can go ahead and do this. And I'm a sucker for this as well because I've done this multiple times, not from the covered call strategy, but just from buying calls on the stock market. I bought calls. I've been up in profit over 100% sometimes, over 50% sometimes. And I was like, I can hold on to it for another couple of days. And of course it goes down in value. So I end up not making as much as I could have made because I'm simply being greedy. Take the money. Just take the money, take the money and go. Come back another day and rinse and repeat. That's all I got to say, and that's it for this video. That's all the need to knows when it comes to covered calls. If you have some other tips or options for me, definitely let me know down in the comment section below. I would love to hear your thoughts. And this is honestly, just like I said, one of a really great strategy. So I can't wait to really try it out for myself. And really take this strategy to the moon. We'll see how things play out. It's going to take some time to get to 100 shares on a couple of these stocks, but either way, we got time. Nothing but time on our side. So I'm out. Take care of yourselves. If you'd like to see more content, you're already in the right place. Dollar Mike. I'll catch you guys in the next video. Make sure you like it. And yeah, I don't know. That intro was way off. But I'm out. Take care of yourselves. Stay safe. Stay positive. Stay hydrated. Dollar Mike. Peace. Catch you guys in the next one.